Okay, we're recording now. All right, well, welcome everybody to the webinar today. We've got Mike Ponte, a very educated real estate expert, to answer all your questions. So how have you been, Mike? It's been a while.
It's been a long time. Yeah, things are great, actually. Can't complain. Christmas is just around the corner, so yeah, getting excited.
That's fantastic. So if anybody has any questions, if you could raise your hand, you see that little hand icon at the top left of your screen, or you can type your questions in the question box and I can read them out if you don't have a microphone attached to your computer. So we see we've got a few people on the broadcast here. Does anybody have any questions? Raise your hand and I'll unmute you.
Don't be afraid, guys. There's no bad question out there. There's lots of crazy things happening out in the marketplace, so don't be afraid to ask. So.
Okay, we've got a question from Dale. Dale, I'll unmute you. You're unmuted. Go ahead.
Hi, Dale.
Do you have a microphone, Dale? No, we can't hear you. Yeah, you're unmuted, Dale, but we can't hear you. Maybe you should type your question in and then I'll read it. Okay, so Dale's question is, how do we hold all of our properties in corporations, personally, inclusion of trust funds, real estate properties, other corporations, etc. You might be able to tell us about how some of your other businesses you hold also. I guess he wants to understand a little bit about corporate structure. So if you want to go ahead with that, Mike, how do you hold your properties that you currently have?
Sure, no problem. It's a good question. I get this question on a regular basis, and the answer is kind of the same, Dale, to be honest with you. My recommendation is you talk to your accountant and then you talk to your lawyer to give you the best advice based on what your personal circumstance is, because everybody's is a little bit different. Obviously, a lawyer is always going to recommend a corporation because that's something that they want you to pay for. But in a lot of cases, for one property, it may not even justify it because you do have to file taxes on that every single year under the corporation, and the cost to file is about $1,000 roughly every year. So you got to really ask yourself if it's truly worth it or not. And if you're more concerned of the liability side, that's where insurance kind of comes into play. And it may be better to just go with a better insurance policy than just under the corporation end of things. So again, it really goes back to talking to your accountant, talking to your lawyer, someone that really understands your current personal dealings from a taxation perspective, and if you've got other business ventures, they'll give you some of the best advice versus myself, because I really don't know maybe what your real estate holdings are and other business ventures would be. Personally, for myself, when I first started getting invested in this game, I bought my first 7 properties on my own. And those properties still today are actually held personally. So I've got those under my personal name right now, and all my corporate stuff, I've got them under corporation and also a holding co. So I've got them in 2 different avenues altogether, where my corporation is attached to my holdco, and then I have other business ventures that are offshoots from our holdco. So anyway, I'm not sure if that's going to really truly answer your question, and the reality is I don't want to be giving any advice without at least you having the opportunity to your accountant and your lawyer, because they would give you some of the best recommendations based on your current situation. Again, personally, my opinion, and again, still ask for advice. If you only own one property or you're about to buy your first property, I personally would not set mine up under a corporation. I'd probably hold it on my own. That's the way I would manage it, because it just doesn't justify the cost of this. But again, talk to your lawyer, talk to your accountant. They can probably give you some advice. And if you don't know one, just shoot me off an email. I'm more than happy to send you some contacts your way.
Hopefully that answers your question, Dale. All right, Hillary's got her hand raised. I'm going to unmute you. Hi, Hillary. How you doing?
I'm fine, Mike. How are you? And Tim?
That was Tim, but I'm Mike.
That was me.
Oh, Mike, Tim, Bob, both of you. Jarek. My question is, okay, on that same note, would you subscribe to setting up a sole proprietorship for that purpose, just if you're doing one or two properties only to start out, in terms of at least minimizing that tax as opposed to being in your own personal name?
You can, and again, I'm still going to probably relay that back to your lawyer or accountant to give you the best advice, to be honest with you. If you're going to set up a corporation or a business, when you're owning one single property, the taxation on one single property is very minimal there. So you're not going to be getting a significant amount of hit on your taxes, because when you're thinking about it, say you buy a single family home, hypothetically speaking, you're making $500 a month positive cash flow, even just that. Say you're making a dead net $6,000 every single year. The taxation on that, it is very, very, very minimal. So I really challenge you in regards to if it really does make sense or not. And again, that's where I have to relay it back to your accountant and your lawyer. There's so many different structures, so many ways to save your money on your taxes, and if it's just you just getting started, again, relay that back to your accountant. I can almost guarantee you your accountant is going to say there is no need to set up a corporation for a single property. Your lawyer will always think it's the best time is to set up a corporation, just because they're more than happy to sell you on a corporation, because they know that the taxes are going to be due and you have to file, and that costs $1,000 roughly a year. So
I got it. Okay. Thanks.
I hope that helps somewhat.
Yeah, definitely. Okay.
Honestly, talk to a lawyer, talk to an accountant, talk to your accountant first. Do you own property right now, Hillary?
Pardon me?
You own
Do I what?
property?
No. Or in Orlando in 2009, and I did just have it in my name, and I didn't have to subjugate myself to the taxes, as you said. But going forward, I'm interested in doing some wholesaling, just to get some quick money in and some cash flow. And I guess on that note, can I just ask you what amount would be, if the comps of a property are sort of between are like 5 to 10,000, is it worthwhile, like 5 to 10,000 range, for me to make some money on? Is it worthwhile for me to bother tying that property up? And if so, how would I do that? Like just to tie it up.
So just to understand the question a little bit more, you're saying that the comps vary between 5 to 10 grand. So I'm kind of reading into that there's about $10,000, $5,000, $10,000 equity. Is that what I'm reading, or is that my understanding?
Actually, sorry. Can I backtrack that? And that's a U.S. property that's down in Venice. But coming to a Canadian estate property, which is a condo, it's it would be there'd be okay, say it's they're asking $235K, and the comps for a completely renoed unit would be between $255 and $280. So I was thinking of lowballing an offer. I know at about $170K, because it's an estate holder, it's an executive, who's holding the property and it's not selling.
Mhm.
So in that case, what I was thinking of is tying it up and then, you know, selling it to a contractor / investor to do the rehab or the reno, and then flipping. I guess they would flip it from there or do whatever they had to do.
Okay.
So
Your question is what?
How do I tie that up? How do I tie that property up if I put an offer in and they accept it?
Well, first of all, whenever you tie something up like that, they tend to obviously ask for some deposits, and then you want to cover that off with conditions that you can get yourself out of at any point in time. So, you know, the reality, be it financing condition, being inspection condition.
Okay.
The one that I always love is you're looking for lawyer's approval, you know, because that really is, it doesn't mean anything, you know, a lawyer's approval for what specifically, but that's kind of your get out of jail free card.
Okay.
Is getting the conditions of getting your lawyer's approval. So, you know, tie that thing up for 2 weeks or, you know, whatever the case may be, especially if you've got somebody that's not, if the property isn't moving by any means, then it gives you a little bit of time. My next question is, do you have investors, do you have contractors ready to go that would be interested in this if you do tie it up?
Yes. I do.
Perfect. So then, yeah, absolutely. So, you know, I would recommend it. Like, hopefully, you've got something to use as a down payment of some or a deposit.
So earnest money down payment, or it's called earnest money. Is it called earnest money to tie it up?
Yeah, pretty much. Yes. Yeah.
And what percentage should that be?
You can use as little as $100.
Serious?
Yeah, I've tied up deals for $1,000 for sure, $1,000.
Wow. Okay. And then, do you have 2 weeks, or how long can you hold it before you know, get everything secured? Like, can it be more than 2 weeks, or is it typically 2 weeks?
Yeah, you can ask for the stars and the moon. The one I always love to use is, you know, you can start off with say 15 business days.
Yeah.
And that's one I always like to start off with. If you need another week or 2 week extension, so be it. You know, always stretch it as much as you can. You know, if you're seeing that this guy is not seeing a lot of action, why not tie it up even longer? And you can use this wonderful excuse called Christmas as a great excuse. You say, listen, just because Christmas is around the corner, it's going to be really difficult to get involved with the banks. So I'd like to tie it up for 20 business days. And you know what? Start negotiating from there.
Right. Okay. Thank you.
Push for the stars, for sure.
Thank you. Thank you. Okay. That's it.
Terrific. Is there any other questions? I'm going to put your hand down there, Hillary, mute you. Unless you have another question, Hillary. Oh, Dale's got another one. I'm going to try unmuting you again, Dale. Do you have a microphone? There, you're unmuted. No, still can't hear. Okay, go ahead and type your question, Dale, and I'll read it out. So the question, Mike, is do you guys do any rent to own? And if so, can you state some of the specifics from your own experiences? One quick clarification there, Dale, is that Canadian or US? In Canada only.
So Dale, great question. Unfortunately, I don't do a lot of rent to own, and it isn't something that our company spends a lot of time on. Very heavily focused in the multifamily side of our business, and in my past, a lot in the residential end of things. And we're more of a buy and hold company. For us, our focus is really buying properties that are, in a lot of ways, very similar to what Hillary's kind of referenced there, and looking for properties that are undervalued, looking for some great opportunities where we can maybe do some small renovations, and in strong economic markets where we do believe that there's going to be a lot of economic growth in those particular markets. But our belief is, you buy a property in a very good price where you've got yourself a great cushion to handle any of the economic challenges that may arise in the future. And that's always been kind of our approach. So, our strategy is cash flow, and we're a big proponent that we want to make as much positive cash flow as we possibly can. I don't know if you have a specific question to rent to own, because I can talk a lot about rent to own, but I don't have a lot of experiences that I could possibly share with you, other than other experiences that other individuals have had. So if there's a particular question on rent to own that you'd like me to answer, I'll do the best I can to try to answer the question for you.
If it's all right with you, Mike, I can give a little bit of color there, because I have worked in the rent-to-own business a little bit. He asked sort of what's our personal experience. Well, at least in the Calgary market, 5 years ago, I could say that it was a really popular strategy. It was really easy to do what's called sandwich lease. The tenant first is something you can do obviously in any market, because you have to buy the house and then do the rent-own program with your tenant buyer. But it has been very challenging over the last couple of years, at least in the Calgary sort of Edmonton corridor, because it was an escalating market. Prices were going up, so it was really hard to find a motivated seller, because they could just go and sell their property on their own. But it is a lot of work. It's not one of the simpler strategies. Not as if I would say any of them is really simple, but buy and hold properties, there's lots of due diligence to know your market's a good fit. But the strategy itself, if you've got your numbers done properly, it's fairly solid strategy. But rent to own, there's a lot of projections involved, because that's how you make your money, is the spread when your tenant buyer closes. And calculating those numbers in a market like we're in right now can be a little challenging, because we don't know what's going to happen, at least in the Alberta market. It's very tumultuous times we've got going on here to know what your projections are going to be 2 years out, 3 years out. So do you have any specific questions about rent to own? Because either Mike or I could probably answer those. And I know you got another question here in the box, but is there anything else specifically to rent to own you wanted to know exactly? Oh, it was just for reference. He said it was just curious whether we'd done it before. So his other question here, Mike, is, as a Canadian looking to do flips, tax deeds, and maybe when I gain some profit, also start investing in cash flowing long term. So is there another part to that question, Dale? Sorry, you said on top there, Dale. I'm not sure what the rest of your question was. Are you sort of asking what strategy is the best as a Canadian to start with? Am I sort of reading into that correctly? Yes, his answer is yes. So I'll give my opinion first, and I'll turn it over to Mike. I've always been a flipper. I've done a lot of flips and wholesaling, and I believe that going right into cash flow, right out of the gate, can be challenging. And I know Mike may disagree with this, but I believe you should flip until you can hold, because holding properties does take a capital outlay. And you can do this one of two ways: either raise your own capital through active income strategies, flipping, wholesaling, investing in tax liens, whatever that could be, to gain your capital base. So then you've got the down payment dollars to go and qualify for properties. And that's the one method, kind of doing it on your own. The other method, which is sort of, I believe, how Mike's got a lot of his properties, is work with partners as JVs. So then you don't necessarily have to put in the down payments. You can go kind of do all the work, and then bring in that partner to qualify, put in the down payment, and maybe you negotiate the deal, get the great terms, manage the renovation if needed, and do the property management, or keep an eye on a property manager in question if he happens to be in a market outside of your local area. So those are kind of the two ways you can do that. And I'm a believer of do the active income stuff first, help out other investors in your neighborhood to find the deals they're looking for, and they'll pay you a wholesale fee to build up your capital base to get into buy and hold. So that's kind of my opinion on what I think is the easiest way to get started, and I'll turn it over to Mike. He can give you his feedback.
Yeah, I don't disagree with what Tim's saying, but I'm going to probably take a couple steps back on that one. And Dale, there are so many ways to make money in real estate. Right? There's hundreds of ways, and there's no right way. There's so many right ways, and there's lots of wrong ways. But it really does start with what your goal and objectives are to begin with. And it's having a very clear vision of exactly why you're getting into real estate to begin with. And secondly is also understanding what type of resources you have to play the game that we call real estate investing. So if you're not in a cash position to invest it on your own, this is where wholesaling comes perfectly, and it's a great starting point to get yourself involved with, because you get to network with some excellent investors out there, being able to go out and source some great deals and be able to make some money on this thing without actually putting any of your own money in it at all. And that holds true for myself. You find yourself, and this goes to anybody in the audience, you find a great deal, I'm more than happy to pay for a really good deal. And it's always a good starting point. So, I always reflect back on what is it that you're wanting to accomplish. And there's so many different people. Myself, I deal with a lot of joint venture partners, be it doctors, dentists, all sorts of people. And the same thing holds true. They have different goals and objectives as well. And for some of them, it's about all equity. They're looking for a good equity plays, and then we try to find the right properties that are going to be able to fit that particular model for them. And then on the flip side, I've got a lot of pensioners that for them, they could really care less if the price goes up even $1. As long as it's strong, showing nice, strong cash flow that's able to support their income on a monthly basis, then those are the right strategies for them. So like I said, there's a lot of ways to kind of skin the cat, and it's just really reflective on what is it specifically you're trying to accomplish here. So that's the one thing I always say is take a step back before you start buying any real estate, and that goes to everybody. Really have a very clear vision, clear objective of what you're trying to accomplish first. And if you are trying to make real estate your new job, hypothetically speaking, and you're looking for an income strategy, then buy and hold can work for you in so many different ways. They can generate cash flow. With everything that's going on in Alberta right now, and I own a lot of property in Alberta, and I am not losing 1 minute of sleep, period, because I know all of our properties generate a significant amount of cash flow, and we can ride out any storm for as long as it takes. I have no concerns with it, period. For those of us that are just looking at doing wholesaling or flipping, obviously the flipping is going to be a little bit more challenging in the Calgary market right now because there's becoming so much more inventory, and the strategy may change completely. But in a more active market, it could do exceptionally well. So take a couple steps back, think about what is it you're trying to accomplish. In addition to that is talk to other people that are doing exactly what you're trying to do. You mentioned, rent to own. You mentioned, be it buy and hold. Talk to those individuals, be it Tim, myself, or other people that are part of the Canadian Real Estate Investment Club. Ask for advice. Try to get some lessons or education. Even that a lot of us even hold our own courses and programs that can provide you with assistance to help you at least learn that strategy so you can be much more successful in that business as well. So I hope that answers your question. Like I said, there's a lot of ways to skin it. I know Tim's referenced a couple, and I know I have as well. So
I kind of missed a question by Lori. You asked what entities best to go with if you want to invest in the U.S. in terms of taxation and asset protection. I can field this one, Mike. I get this one all the time because I've done U.S. real estate as well as invested in Canada. Now, it's not a one-size-fits-all, and Mike said you got to talk to your accountant and talk to a lawyer what your entity should or shouldn't be. And I'll tell you this from experience. I ran a U.S. company for over a year without having any assets in it because I kind of went along the lines of I need to structure first before I have property, and I highly caution you to do that because it doesn't matter what state you pick. To have to file a corporate tax return, state regulatory fees, these things have a substantial cost. So unless you've got a number of properties and plan to go out and buy, I would say up to 4 or 5 in a very short period, you don't really need a structure. You can just get adequate insurance, and you can talk to a cross-border accountant if you really want to go the structure first. but I would, reach out to myself or reach out to Mike, and we can kind of have a conversation about what your plans are, because it really matters on your circumstances. Do you have over $1 million of assets in Canada? Do you plan on holding a lot of property? Do you plan on just wholesaling or flipping property? It really depends on what your goals are both now and in the future. And you can always add additional structure later. To have a elephant of a structure in the beginning can be very expensive until you've got profitability running through your deals. So that's sort of my answer on that. I would talk to a cross-border tax specialist, because they have certifications on both sides of the border, and you can send me a message or send me an email, and I can give you information of a good one if you're looking to do US.
Yeah, I can share another story too real quickly. Like, I have a client of mine who actually owns quite a few assets with our company, and he's done everything personally himself, and then he made the decision that he was going to set up a corporation for future transactions, which at that point in time made sense. So he bought one property and he put it under his corporation, and he's having all sorts of regrets just because of the amount of costs and work that's involved. And currently we're refinancing one of these projects, and not only do they want to know all the information about him, they want to know all the information about this corporation, which only holds one property. It's got to be worth it, and like Tim's reference, you've got to be in a position where you're hopefully holding several assets under this corporation. For the exercise of one, I question if it's really worth it. But again, it goes right back to talking to your accountant and your lawyer first.
So Kathy's got a question. I'm going to unmute you.
Hey everyone, it's my pleasure to meet everyone here. My first time to join our organization's webinar. Quickly, I do believe both hold to own and wholesale got separate benefit. I actually want to try both. I think when market is good, I may like to try wholesale, and then Calgary market like this, I may try to get more rental property and hold it. The most concern is for me, even I pay 20% down, how can I get mortgage for the third one, the fourth one, the fifth one, continue get mortgage? Is that the way really to get more and more rental property, or have to grow up with some private investor together and forget the mortgage? Because I'm still learning. This is my first question. And then second, if we really do wholesale and I don't need to pay any down, does that mean I don't need to be one of the owner, and that my name would not be on the title, and then just help to do the renovation and flip out very soon? I know my question may be very beginner because I'm still learning. Thank you, Tim, and thank you, Michael. Thank you, everyone.
No problem. Exactly, really good questions too. So maybe Tim, if you're okay with this, I'll let you do the answering of the wholesaling one. Are you okay with that one? Because I can talk to it, but you've got more experience on it than I do. Are you comfortable with that?
Yeah, for sure. Do you want me to field that one first, or do you want to go ahead with the other two?
Let me start with the other ones first of all. Actually, you know what? Do the wholesale one first, and I'll take care of the other two, if that's okay.
Okay, sounds good. So in regards to wholesale, Kathy, you're not actually going to be taking possession of the property. You're just going to be getting it under contract and basically selling that contract to another investor. So if you find a property, as an example, let's just say you know somebody who's about to go into foreclosure, and you get in touch with this individual and you explain to them, listen, if you lost your job, you're not gonna be able to pay your mortgage, we can pay off your 2 months of back payments and we'll save your credit, all these sorts of things. You educate them to see why it's a good solution for them. You got a property that's $100,000 below market value, you can sell that contract. Let's say it's worth $300,000 and you get that property in contract for $200,000. You could sell that contract that's got the property tied up for $200K to another investor for $10,000, $15,000 more, because there's $85,000 of equity built in for the end buyer.
Right.
It could be somebody like me. I'm currently looking for properties in Calgary, and now's the time to definitely do some wholesaling in Calgary because there's lots of people that are having tough times, and
Right.
you can market to them and post ads and try and find people that are in a tough situation. You can negotiate with them to help them out. And if you need help with contracts and how to do some of that stuff, you can absolutely send me an email or give me a phone call, and I can help you out with that.
Great.
If you like. So that's what you're doing with wholesaling. So you're going to have to still put a deposit down with your offer to tie the property up, and then give yourself as much time as possible. If you can get 2 weeks, that's great. But my caution there is you don't want to give 100 offers and then people look at your company, or they hear that Kathy, hey, she never closed on any of these deals, don't accept her offer. You got to make sure you've got some buyers on your list and you're shopping for what those buyers are currently after to be able to close that deal quickly. I'm a big fan of offering seven business days on your offer, because if I was a homeowner right now and you said, listen, I'm going to be able to move your property in a week, or it's just not a fit for our network, I wouldn't be too upset if my property was tied up for just 7 days. But if you got it tied up for 2 weeks, I might be a little upset with you if you said you could close it and it's been off the market for half a month. So that's some of my advice on wholesaling. And if you need help with sort of contracts and things like that, then we can talk about that offline, because that's probably a 2-hour conversation, just that.
Yeah, that would be great. I do agree. Right now, I think maybe until next year, early spring, even to the summer, it could be a really golden time to buy something in Calgary. And I've been waiting for this moment already more than 2 years, 3 years. So I can look forward to a few transactions down the road. I may really need you guys' help, Tim and Michael, and would be nice we hook up in future together.
Well, I'm going to answer your questions about your mortgages too, Kathy, just because that is a very good question. I'm glad you asked it, because a lot of people aren't really aware of the limitations that the banks have. And this is good for everybody to know. Right now, the banks are being extremely, extremely anal right now. Getting financing, refinancing is becoming quite the task. For us as an organization, we've been doing a lot of refinancing, getting into a cash position. And Kathy, the way you're thinking is very similar to the way our company is thinking as well. Is we do believe opportunities will be ahead, and we're getting ourselves in a position to get ready into full acquisition mode. But we are very, very patient. And this whole year has been focusing on specifically dealing with banks. And my common joke is I'm talking to the banks more than I'm talking to my wife. Because the amount of information that they are asking for is unbelievable. And I've been doing this for a long, 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 long time, and I've never seen anything like it.
I understand. Yeah,
so you can be prepared. So the banks are being really sticky. My recommendation for most people is get yourself a very good mortgage broker. And if you don't know one, come and reach out. We'll definitely connect you to some right people that understand the investment world. Because mortgage brokers have become a lot more important in this game than they've ever been before, because they are the go-between between your conversation with the bank, and you got to be very, very cautious with what you're kind of presenting to the bank, where they may also turn down your mortgage. So I'm putting that as a small caveat. Get yourself involved with a good mortgage broker. In this day and age, they will be your saving grace in a lot of great deals. To answer that question further, Kathy, most banks, they tend to look at your debt service ratio. So they want to see how much income you make on an annual basis. And they don't want your expenses exceeding over 40% of your income. Okay, so that's kind of the measurement stick that they look at. So if they see your expenses exceeding over like 40%, 45% at the high end, they'll probably not give you a mortgage, to be honest with you. So a good exercise that I encourage most people to do is just understand what your debt service ratio is, and it's very simple: income minus expenses, and you'll be able to determine that very, very quickly to see if it makes sense. Again, this is why a mortgage broker, you want to get them involved, because they can help you try to determine what that is. With a good credit score and with a good debt service ratio, you tend to see that banks will give you maybe 3, 4, 5 is kind of is the magic number. 4 and 5 is the magic number of how many mortgages they will give you. After that, you're kind of tapped right out. And you may be able to squeeze 1 or 2 more in, by doing some creative financing. But you're probably going to be tapped out roughly around 4, 5 at the high end. And so what you tend to do is, if you're really wanting to become the next Donald Trump of the world, you're probably going to have to do some partnering up with individuals via joint venture partnerships. And the way that tends to work is the joint venture partner will actually qualify on the mortgage, and so they're on title and on the mortgage. You will not be qualifying for that, but then you would put a joint venture agreement between the partner and yourself where you own a percentage share of that property. And then, part of that joint venture agreement is an understanding of what the roles and responsibilities are. I know I've done a presentation for Canadian Real Estate Investment Club on joint venturing, so I encourage you guys that are interested in learning about joint venturing, just go on to some of the old presentations, and you'll be able to find one of the ones I've done. This was probably maybe about 2 years ago, but there's a lot of great information on joint venturing on one of those presentations. Another strategy that you can in regards to qualifying for mortgages, and it works more so in commercial than it does on residential properties, is setting up a corporation. And this is where it does work very well, is once you do structure a corporation, you can actually have the corporation qualify for your mortgage. Under the residential realm, it's a little bit different, because under residential, they'll want 2 years of your financials under the corporation before they actually are able to use it. So if it's a new formed corporation just for the purposes of acquiring property for residential properties, it's not going to work. If you're looking to buy commercial, and when I say commercial, I'm talking like apartment buildings or a commercial building like a strip mall of some sort, you are able to structure under a newly owned corporation where the corporation qualifies for the mortgage. It's a little bit of a different financial structure, and the banks look at the financing a little bit differently. But there is an ability where your debt service, your personal debt service, won't be impacted under the commercial banner at all. So those are just a few strategies. So if it's for yourself, Kathy, to begin with, expect 4 to 5 to be kind of your cap. And then after that, you'll probably need to start looking at joint venturing. And for myself, I'm telling you that's because of experience. So I was fortunate enough to be able to get 7 properties on my own, and then after that, I had to kind of look at a different avenue altogether. So hopefully that answers your question.
That's already very difficult to get 7 by your own name. Yeah, I'm still working on this part, but I do understand how much benefit and advantage to get a joint venture. For sure. I will go check the previous lecture about the joint venture, and I will learn more.
Yeah, and if you've got questions, Kathy, please don't hesitate to give me a call or just shoot me off an email. I'm more than happy to help in any way I can. So. Yeah,
of course. I think it maybe very soon I may need a really good broker. I do have a few broker, but I don't really know if they can keep getting me property one by one.
Yeah, if you need a broker, just let me know. I can connect you with some great ones. If not, there's lots of resources even through Canada Real Estate Investment Club that you can just shoot out the question. Anybody know any great investor or mortgage brokers out there? We will get a ton of people wanting to share a contact with you, and if they don't, let me know. I'm sure Tim knows a few as well. We're more than happy to help. So.
Okay, great.
I certainly do. So, and I will add a little bit to that. I'm going to meet you here, Kathy. Not all mortgage brokers are created equal. They're people like anybody else, and some of them have got more experience than others. So, reach out to the club. Post a question on the forum under financing, and you'll definitely get some answers that way, or reach out to Mike or myself, because you want a really experienced mortgage broker, especially in the climate right now with the lending criteria the way it is, like Mike said. Thanks very much for questions. They're excellent. I'm going to put your hand down. Any other questions, guys? We got about 10 minutes left, so. I was a little bit late, so we could probably go to about 10 past if that's all right with Mike.
Yeah, I'm fine with that. No problem.
Any other questions? I don't see anything in the chat box. Just raise your hand if you've got a question so I know where to look in the chat box there, guys.
Yeah, don't be afraid to ask, guys. There's no stupid questions by any means. So if you're hesitant because you think it's a dumb question, there's no such thing.
Only stupid answers. Okay, Hillary's got one first. I think that was the first hand, so I'll unmute you. Go ahead, Hillary. Hillary, you there? Oh, we can't hear you. Can you type your question for us, Hillary, please? All right, well, we're waiting for Hillary to type her question. I'm going to unmute you, Lori. Okay, go ahead, Lori.
Can you hear me?
Yeah,
I got you, Laura.
Awesome. So first of all, thank you so much for holding that webinar. I'm really excited to be here and really grateful for that opportunity.
Well, thank you for being here.
Thanks. So my question is, I've done a lot of research, and a lot of times I hear people saying that real estate wholesaling is not legal in Canada. How does that work, and how does that take place?
Do you want me to field that one, Mike?
I've never heard of real estate not being legal or illegal in Canada, but Tim, feel free.
Well, it's funny. It's a great question, and I will tell you from experience. I was told that a number of times my first year in real estate because a lot of lawyers just don't know any better. Lawyers are taught in university to mitigate risk. That's their job. So if they hear of a concept or a strategy or a contract structure that they don't know about or never heard about, then they automatically say it sounds fishy, and they'll tell you that it's illegal or that sounds like it's not above board. And that was just a function in my first year of talking to what I call traditional real estate lawyers. And what they specialize in is transferring a property from one party to another party. There's always a lawyer involved in any real estate transaction. That's what a lot of real estate lawyers do. They just do a standard, what's called a conveyance from one party A to the purchasing party B. So if you're speaking to a real estate lawyer like that, or an uneducated investor potentially, they could give you that sort of feedback. So it's absolutely legal in Canada, and it's legal in all of the United States. And I don't know about other countries because I'm in North America. I'm here in Calgary. So you have to have a creative real estate lawyer that can show you how to structure your contracts properly. And the challenge comes around how you get paid in real estate. And you really got to talk to your lawyer that way, because some realtors that don't really know the game that well, because they're realtors and they do their thing and they've been given their education. They might say also sometimes that wholesaling isn't legal, but that's what it comes down to, Lori, is that how you get paid can't ever be called a commission. If you were ever to do wholesaling, you're just selling a contract for a fee. You're not charging a commission. It's how things are phrased in the legal documents, and that's what law is all about, is how things are worded. So you really got to talk to a creative real estate lawyer. I can give you the number of an excellent one here in Calgary. Where are you located, Lori?
I'm in Calgary.
You're in Calgary? Yeah, give me a call. I'll give you my email and phone number at the end of the session here, and you can give me a call. I'll give you the information of an excellent lawyer.
Awesome. Thank you.
I'm going to just expand on that too as well. And this goes for not just a lawyer, but pretty much anybody on your investment team, be it a mortgage broker, your accountant, your realtor. You want to find people that are experienced in real estate investing. And part of the things that I try to even teach as well is you've got to interview these people as if you're hiring them as employees, because the reality is they're here to work for you. But if they absolutely have no idea about real estate investing or don't own real estate, then you shouldn't be dealing with them in the first place. And again, this is one of the great things about the Canadian Real Estate Investment Club. You got a forum of tons of different investors that you can reach out to and asks for referrals of people that are real estate focused in their fields, be it a lawyer, be it an accountant, be it a property manager, realtor, mortgage broker. All of those individuals should have real estate investing experience in whatever category of investing you're looking at being involved with. So I encourage you just to constantly build that database of good contacts to help support you. So.
Thank you. I'd be happy to hear about any good contact for that.
Yeah, we got you covered for sure. Thank you very much for your question. Is there anything else, Lori?
No, not at the moment.
Okay.
Thank you so much.
You're welcome. I'm going to mute you. Any other questions? Just raise your hand. I'll unmute you if you have a mic, and if not, type your question. Well, in the meantime, I've got a question for you, Mike. What are things doing in the BC market right now?
They are absolutely going bananas, to be completely frank. It's an interesting time out here. You know, I think the definition of foreign investing is starting to really, the drum's starting to beat a little bit harder out here in regards to trying to better understand it. So affordability in the Vancouver market in particular is just insane. Like, you know, the reality is most conventional BC, or Vancouverites, I should say, cannot afford property down here, and it's becoming so insanely expensive. From an appreciation perspective, prices are continuing to go up. I don't see that changing anytime soon by any means. It is a speculation play. So for those of us that like to play the game or play a little bit of risk, it's a great market to get involved with. The only problem is the way the prices are going up, it could go down just as quickly because it's just really it's speculation. You got a lot of foreign investors coming in. They're making the investments. They're buying it. A lot of properties that are sitting vacant, but they are owned. And what's happening is people are, it's kind of that ripple effect. So as Vancouver's prices is becoming unaffordable for the general public, prices outwards towards the Fraser Valley, Burnaby, so 45 minutes away from Vancouver, have all started to skyrocket like crazy as well. So you're seeing a lot of people that were once living in Vancouver or Burnaby starting to move out so they can afford things, and it is becoming extremely unaffordable. So prices will continue to go up. I don't see that changing for at least the next year. The only problem is when you're buying properties in here, they do not cash flow at all. In fact, they're significant negative cash flow in a lot of cases. So you just got to be prepared for that. But again, you're seeing prices moving up very quickly. So.
And that's a trend that sort of worries me about sort of Vancouver marketplaces, even Toronto marketplace. I mean, it's been just going like crazy. I was there about a year ago, and I saw a building where the prices started at 1.1 million for every unit in that building, and I just don't see who's buying these things. I mean, that's a market that's just not sustainable. And at some point, you know, what goes up does come down eventually, like you said. And you know, at some point, there's going to be a correction. I think a lot of these speculators are going to get caught.
Yeah, you know, I've been saying that for the last couple of years, to be honest with you. And like I said, when you're seeing, like, the number is this, so really put this into perspective. To live in Vancouver right now, to buy a house, a little over 80% of your take-home income goes towards a mortgage. Okay, so that's not including groceries. That's not including gas to fill up your tank. That's not including clothes. 80% of your take-home income goes towards your mortgage. So how is that sustained? It can't, but it's been like this for a very long time. So again, this is how the impact of foreign ownership has really taken a hold of Vancouver and is just driving the prices through the roof. Now, what's happening here, and we're starting to see it a little bit more, is there hasn't been a real understanding of how much of an impact foreign ownership has had. So there's no statistics behind it, but I think you're going to start to see some attention to this very soon, and I would imagine in the next couple of years they will be doing some work in regards to understanding exactly how big of an impact that is. And I think once they've clarified that, things will eventually change. So for the next year, year and a half, 2 years, I really don't see anything changing, especially globally with where the economies aren't doing well, and especially in China, where their economy is not doing that great. So they'll put their money over here in Vancouver, where they feel with real estate prices are continuing to go up, might as well park their money here, and they think it's cheap over here, so they'll just buy quite a few properties and let it ride. So very interesting times.
So any other questions from the group? Oh, we've got another one from Hillary. Let me unmute you. Go ahead, Hillary.
Can you hear me now?
Yeah, we can hear you.
Oh, yay. Okay. So the question is, what about auctions? Now, I heard about maybe 2 months ago in Vancouver, a property, probably a condo and probably a shoebox, but it got contracted out or got bought up by auction for $1,600 or $1,628 to be precise. Did you read about that, or what is your opinion about auctions? And
I'd be very surprised if it lasts that long, to be honest with you. A property for $1,600, I've never read anything about that.
Okay, well maybe I didn't check my source, but I can't give you any details on that. But I just thought I was wondering about the whole auction idea, and must be very competitive. But is it worthwhile to take a look at properties through that? By that means.
Absolutely. It's definitely worth taking a look at for sure. I wouldn't use that as your only resource to finding good deals. There's tons of ways to find them, Hillary, so you don't need to just focus on
well, I was just thinking in the case of Vancouver and places where it's really crazy high, like Toronto you're right, Toronto is nuts, but that was probably like the Trump Tower or whatever. Like most normal people, those are people with more money than sense that would buy something like that for like a shoebox down at Bloor and Yonge, downtown. Yeah. But most of us don't do that, It's there's a lot of other opportunities here, and again, the distressed properties, there are tons. People in circumstances that they can't help, or that they've lost a spouse, or they can't pay the mortgage, whatever. There's always that everywhere you go. So thankfully.
Like at the end of the day, like the Vancouver market is just so active right now that honestly, even to get into an auction position right now, it's not going to be below market value. I can guarantee you that. It's just
right.
It's just too active. And
right.
for anybody playing that game in the investor world, it's just too active. Like there's so many different developers out there to buy. Can they find a good deal here and there? Of course they can. You can find good deals. There's still deals to be had. And that goes in any particular market. And the way you really find it is getting yourself very, very connected in the marketplace. Talk to a lot of realtors. Talk to lawyers. They tend to be a great resource for you because there's lots of that stuff. There's lots of tax issues. There's lots of people that are divorced. Lots of issues in regards to people that have passed away. There's all sorts of different scenarios. Like for us, that's kind of our main strategy is just building great relationships with people and finding out, getting the inside scoop before it actually goes on the market and try to scoop them up right away. And to me, that's the way we've had most of our success is because of our ability to do a lot of networking and talking with the right people. So when something came up, it makes the realtor happy because we can turn this thing around within hours versus taking a week showing the property, marketing the property, and we get a good deal on it. They get out of the position that they're in. And it's a win-win for everybody. So to say auctioning can work out well, and every market is completely different. In Calgary, there could probably be some really good deals right there because there's so much more inventory in that marketplace now. But saying that, I still believe there's still a lot of room for it to go down, to be honest with you, before it actually starts to pick itself back up. So patience is kind of the game at this point in time, in my opinion. Vancouver, this is one of these markets, and I don't normally like this, and that's why I don't play in this market at all. Like I have 0 investment properties in here because it is very speculative. For me, I'd rather I want to make sure that the properties generate cash flow. And my analogy that I always tend to reference is when you buy a piece of real estate, regardless if it's a residential property or an apartment building, you're actually buying a business. That's my honest belief of it. And so I challenge everybody, would you ever buy a business that loses money every single month? And more often than not, the answer is no. You have to go with the same mindset when you're buying real estate, especially when you're on a hold position, buying hold position. Never buy properties that generate no income because it's not going to pay you any dividends in the long run. It can absolutely hurt you significantly. And here in BC, you don't know when foreign ownership just all of a sudden just dies for whatever particular reason. And trust me, at some point in time, I don't know when, Vancouver will correct itself. How much? I have no idea. But it's just unheard of to see the type of numbers that they're in. When you take a look at the research and the statistics that are there, you would never imagine that prices have gotten out of control the way they have. But they have. And, you know, what goes up really quickly eventually will probably go down very quickly at some point in time. Right now, we're enjoying kind of an uptick. Things will continue to go up as long as foreign ownership goes up. So we'll just have to be patient and wait to see when things turn around.
So I got a couple things to add there. I totally agree with Mike when he says you wouldn't want to buy a business that loses money every month. And I don't think whatever strategy you're using, should you have a property that wouldn't sustain itself, whether you're doing rent to own, flipping, whatever property you're ever going to buy, it should be able to at least hold its cost. It should never be in a negative position. I don't care what strategy you're going to do. So that's one thing. Second, to do with auctions. Each province does a little bit differently. In Alberta, it's what's called judicial sale. If you don't pay your taxes, or if it's a divorce, you know, probate, whatever it is, it goes through judicial process. So it's a court process, and they typically are priced at market rate, at least in Alberta. I can speak to that. I know Ontario a little different. It's what's called power of sale, and it's an auction more in the true sense as to what somebody's willing to pay for it. But there tends to be a lot of competition at these auctions. They're publicly advertised in the paper and other public record. There is generally a lot of investors there. Sometimes there's institutional investors there as well. So the properties can get bid up really high, but if you happen to catch one in a market that's not as major center, like Edmonton, Calgary, Toronto, maybe a smaller place like Hamilton, you know, these types of centers, you can get some amazing deals, no doubt about it. But you're better off looking at a province that's power of sale rather than judicial sale. Because in my experience, what I've seen, at least in Alberta, and I know that the laws are very similar, with judicial sale provinces, you're typically at market rate. And because it's an auction, what I call uneducated money will go in there thinking they're getting a deal, when really, in fact, they're paying very close to market price.
Okay.
So that's my thoughts on auctions.
Okay.
Answer your question?
Can I ask one more question?
Yeah,
if
go
it's
ahead.
okay. Okay, what about cash or private or hard money lenders? Would you advise, you know, for someone who's kind of cash strapped, to utilize them if they found a really good deal?
The reality with private lending, it can work out well for you. Normally, the term that tends to happen is you're looking at maybe 1 year or a 2 year term, kind of at max. I don't see that lasting much longer than that. So as long as you've got a strategy in regards to exiting that private lender, with that period of time, it can definitely work in your favor. So, for example, if you're doing a fix and flip, it can work very, very well. You know, because it's short-term financing, you're paying a little bit of a higher premium for this, but you know it's only going to be the short term anyway. You know, set it up where you're only hopefully needing it for a year, and you can always get an extension for probably another year. More often than not, after 2 years, it gets a little bit questionable. You tend to see the private lender wanting to kind of cash in at that point in time. But it is definitely a great strategy if you need it. But don't use that as your. You do need to have a backup plan in regards to how you're going to exit from the private lending and go more conventional. in the next year to 2 years. So just as long as you're coming up with a strategy on what you're going to do and how they're going to get paid back, then you're good. So, but it does work very well. I've used private lending, private financing many times, and it's becoming much more common in this day and age with the lack of financing with the banks right now than ever before. So, and now you're starting to see the rates starting to reflect it too. So in the past, it used to be, for private lending, with an 8%, 9%, and even higher. I can get private financing right now for 5%, 5.5%. So.
Oh, well, it's good to leverage other people's money, right? Isn't it? If you have a really good.
Well, you can, but like I said, at some point in time, they're going to be wanting their money back. So just be prepared for that.
Yeah, you have to factor all of you have to do your number crunching.
That's really the thing, Hillary, is you have to run your numbers very carefully and make sure that your project will support that private financing. And 100% agree with Mike where he says you have to have a very solid exit strategy. And I would go so far as to say you always need 2 exit strategies. So within that period of time you've agreed, often you can get the loan extended with private lending, but the way that private lenders make their money is by rolling it over many times in a short period. So they don't want you to have that loan for the long term. So you always have to be able to figure out a way that you're structured well to be able to exit that hard money loan and be able to pay them back, or refinance with traditional financing after you maybe added value to a building, these sorts of things. You have to have a well-defined plan up front. I've extensively used private money. I've helped people find it in the past, and if you're interested in that, we can have an offline chat about it as well. But it's a very useful tool in your tool belt as a real estate investor. At some point, you're going to need it. Everybody runs out of credit or cash at some point in their real estate career, and you have to be able to know how to leverage private money to move your projects forward.
Great, thank you.
You're welcome. So we're just about 10 past here, ladies and gentlemen. Is there any more questions? I don't see any more questions in the box. If there's any more questions, we've probably got time for one more. So raise your hand if anybody's got one. No, I don't see any raised hands. So what I'm going to do for everybody on the call here is I'm going to give you my office line. So if anybody has a question about the things that I talked about, because I want to always go through the educational part and make sure everybody gets their theory questions answered. And if there's real depth and detail people need, we have those conversations on the forum or offline. My office line is 403-246-4409. And you can call me there anytime, and we can connect about the lawyer's number and mortgage broker. We're here to help, so anything you guys need. And my email is on my profile on Canada REIC, so it's very long, so I apologize, I'm not going to read it out, but you can go find it there on my profile. And if Mike wants to give his email or whatever way he wants to contact him, you can reach out to him the same way.
Yeah, just go onto my profile there through Canada Real Estate Investment Club, and just shoot me off a message. More than happy to chat. If you want to call me directly, you can call my office here at 604-882-6901. More than happy to help.
Well, thank you very much, Mike. It's always a pleasure to hear you speak and answer people's questions, and I look forward to speaking with you again about some of your projects you got on the go. So again, thank you everybody on the call. Excellent questions tonight. I always love it when people ask really good questions. And again, just a note to everybody, don't worry about how elementary you think your question might be. Somebody else is probably thinking the same thing, and all of us were in your same shoes, exactly where you are now with the same questions at some point in our careers. So we're here to help you leverage our experience and knowledge to get all your questions answered. That's what Canada REIC is all about. So thanks again for everybody attending this evening, and we look forward to seeing you on the next one. So if Mike's got any more comments, go ahead.
No, thanks, guys. Appreciate you taking the time to talk with us.
Terrific. Well, we'll see you on the next webinar, and thanks everybody for attending. Have a great night.